Hey everyone, welcome back to Corporate Decoder. Today we're diving into Calix's latest annual report. It's going to be a wild ride filled with numbers, strategies, and maybe a few surprises, but don't worry, we'll make sense of it all together. I know that sounds boring, but trust me, it's the only way we can find out if this thing is worth something or not, kind of like sifting through a messy closet to find that hidden gem. Calix makes software and equipment for internet service providers, helping them become what they call broadband experience providers, or BEPs. Basically, these are companies that want to offer more than just basic internet. For the year ending December 31, 2024, Calix's annual report says their mission is to enable BEPs to simplify, innovate, and grow. They think they can help these service providers offer cool new services to their customers, make more money, and keep people happy. Their strategy, it starts with data. They want to gather information, analyze it, and give useful insights to their customers, which is mostly done through something called Calix Cloud. They're also focused on building and improving their platform. This platform is supposed to make things easier for BEPs by giving them intelligence and automation across their entire network. Calix wants to work closely with their customers to show them why their platform is valuable. They are also investing in their sales teams as well as working with partner companies that have local market expertise. Calix is trying to reach more customers, including smaller internet providers, cable companies, and even electric cooperatives. They've been adding a lot of new customers each year. They also offer services to help their customers improve their operations and use the data they get to be more efficient. Calix offers something called Smart Life Managed Services. These include things like protecting devices, making home Wi-Fi better, and even helping small businesses with their networking needs. These services are made to work together with Calix's other products and are meant to be easy for BEPs to launch and manage. They have roughly 1,600 customers who use them, including companies like ALLO Communications and Verizon. The US government is putting a lot of money into expanding broadband to rural areas, so Calix has a team dedicated to helping their customers get those funds. Calix sells its stuff mainly through its own sales team, but they also work with some partners. They believe this direct approach helps them stay closely connected to what their customers need. Research and development is key, so they are spending a lot to develop new platform features. Their team is focused on software, cloud platforms, and other advanced tech. They rely on other companies to make and ship their products. This helps them get new products out faster, save money, and handle more orders. Calix says it's trying to be sustainable, thinking about energy efficiency and recycling when they make their products. Because some of their customers face weather delays in the winter, the company's first quarter is typically slower. But as they sell more recurring services, these seasonal ups and downs should level out. The communications market is super competitive. Calix competes with companies like ADTRAN, Nokia, and Huawei. They expect the competition to get even tougher. Calix relies on patents, trade secrets, and other legal protections for their technology. They are aware that they need to continue to protect their intellectual property or IP, or they could be vulnerable. They have over 1,800 employees around the world. They consider their employees very important and invest in keeping them happy and skilled. The report highlights a bunch of risks that could affect their business. Here are a few of the biggest. They need to increase sales to both new and existing broadband experience providers, or BEPs, or their long-term growth could be hurt. They depend on third-party vendors. Problems with those vendors, like supply chain issues or disruptions, could hurt their profits. Cyber attacks are a big threat. If their systems are hacked, they could lose valuable information or have their operations disrupted. If people don't adopt their new platform, cloud, and managed service offerings, it could hurt their financial results. Changing market conditions could make their inventory less valuable. Expanding internationally is risky. They face challenges like dealing with different laws and protecting their intellectual property. Legal battles and regulatory issues could also be costly and harm their reputation. Their gross margin and operating results have fluctuated a lot in the past, making it hard to predict future performance. They're exposed to the credit risks of their customers. Losing key personnel or being unable to find qualified personnel could hurt their ability to grow. They may need additional capital in the future to finance their business. There are many other risks in the legal text, but let's skip ahead to the fun stuff. They use what's called the NIST cybersecurity framework and the MITRE ATT and CK framework to guide their cybersecurity efforts. They have a committee and team in place to help them deal with cybersecurity risks. They claim that risks from known cybersecurity threats have not materially affected them. The board of directors oversees the company's implementation of its cybersecurity risk management program. They receive quarterly reports about cybersecurity risks, and management brief the committee as necessary. Our chief operations and product officers monitor their prevention, detection, mitigation, and remediation of key cybersecurity risks and incidents, as well as the team responsible. Now let's take a look at their numbers. Their revenue was about $831.5 million, a 20% decrease from 2023. Gross profit also took a hit, decreasing about 12%. Large and medium customers decreased in revenue, while small customers remained largely constant. Sales and marketing expenses increased a bit, about 2%, while research and development expenses also saw a small bump. Sales as percentage of revenue increased, while in the short term we should expect both sales and R&D to remain largely constant, with potential declines for revenue due to cost cuts. Interestingly, they had a tax benefit of about $1.9 million compared to a tax expense in 2023. They had positive cash flow from operations. Cash increased as accounts receivable and inventory was reduced in 2024. Cash usage here increased as they acquired new marketable securities and had capital expenditures. Cash from financing increased with stock issuances that partially offset common stock repurchases. They think they have enough cash to cover their needs for the next year at least. They have significant purchase commitments and operating lease obligations. They are on the hook to protect various parties against claims, but these obligations are hard to quantify. As of December 31, 2024, they had roughly $300 million in cash, cash equivalents, and marketable securities. The company's auditor, KPMG, has audited their numbers and thinks they're fairly presented. However, the auditor flagged the evaluation of net realizable value of components as a key audit matter, meaning it required extra scrutiny. The auditor was concerned about how Calix values its inventory, especially considering the risk of it becoming obsolete. To address that concern, the auditor said they have reevaluated the analysis provided by the company to assess the accuracy. We learned previously in the report that members from the board of directors monitor their plans to prevent attacks. Finally, as a part of their responsibilities, the company is also required to list out potential situations that may prevent stock prices from being stable. These include changes in earnings, governmental regulations, and world economics. Now, let's zoom out and look at the bigger picture. Calix is in a fast-changing market, but has been trending down in its revenue and profit. They are betting big on their platform and managed services. The decrease in revenue from existing customers could be worrisome, and their success depends on adapting to the changing market. We have noticed in the report that they may need to purchase additional financing. They face many risks like intense competition and supply chain issues which could impact financials. I would say with moderate confidence that Calix is facing a critical phase. While innovative, several factors like market pressures and financial uncertainties will decide the coming years. Thanks for watching. If you have an opinion or thought this helped, please leave a like, comment, or even subscribe.